All right, Thursday the 21st, highlight of the day is around 9:10 Central Time in the S&P. Couple things came together. Number one, you only know what you know that's in front of you. Now, you could go back and look at too much information and confuse the hell out of yourself. You could break it down, which is what you should do, and take it into, well, where are we at right now? So you look at this chart, all I can tell you is right now, they're in this consolidation between even and roughly 0.5 even. All right, that's where we're at right now. What has it done? Well, if you go back, it's been weak over the last hour or so going into this analysis. So we got weak. Before we got weak, what were we? We were bullish. The room and most people were, rightly so, 60% bullish. It's not bad to be wrong. It's bad not to know it for a very long time. You're supposed to be bullish or bearish with the crowd, but know it before them. So this had a familiar as Monday or Tuesday where we opened up bullish and went down. So that's what happened. We open up, we're bullish as far as the sentiment goes, but we pretty much just go down. So it was be careful trying to buy it. That doesn't mean you can't buy it and make money. You just got to be careful. So then we drag sideways. So at this point, that's what we know. We open up bullish, we go down, and now we're in this range. What's next? Well, what's happened within the last 5 or 10 minutes? Anything? Yes, you could say we rallied from even, regular trading session low, all the way up to 0.5. A pretty decent rally, a 5-point rally in a short period of time. So you have to call it a move. So the market's on a short time frame, bullish or bearish. You know and should say bullish. Okay, great. What happens when the market's pretty bullish? People try to do what? Buy or sell it. They buy it. And what do people like to do that they think they're smart? They like to buy a pullback. And there's nothing wrong with that. What's wrong with it is when you're wrong buying a pullback, getting out. That's where people suck. Not getting in, but getting out for losers. Okay? So it's okay to be bullish at this point, and it's okay to even buy a pullback like it's coming down. What's not okay is, as I fast forward this, is to see the speed of which it goes through what should have been good support and doesn't even hesitate when it comes back up to 0.4 to go north. So at this point, at some point in this bar, and I did to the group say, there's a lot of things that have just lined up to make this market look out below. Number one, we were short time frame bullish, long time frame bearish, and you came through what people at 3 even and 4 even would have thought would have been something to buy, and they're stuck long. Okay, stuck long, which means they're sellers and they haven't got a chance to get paid. So now they're sellers and they're underwater. Here's the other thing that lined up. The fact that you're on the other side of the mountain. What does that mean? Well, the hard work is over with. There are X amount of people that are short, and because it went up, they're probably not in. So on the other side of the mountain, whatever X was over here, it's less over here. That's all. There's less shorts probably in the market here than over here. How does that look on a chart? There's less shorts here now in here than there was in there. Why? Because we went up and came back down. All that means is less shorts, I always say this, is less buyers below, less buyers below. It's easier path to go lower. All right, so that's the whole context. We also got a little negative news about China watching if Trump's going to sign this Hong Kong piece of legislation that passed the House and Senate yesterday, and that could have some negative effects on the trade deal negotiations going forward. So that didn't help, but that came out after all of this transpired. So you already should have been bearish and or short before it, been on the right side of the market. So then we fast forward it and we walk up to an area that was probably overhead resistance, and then they step all over it and go lower. And they go through what was pretty good support. They don't even hesitate there. They go through, and then they use it as good resistance. And then the market sailed lower. If we drill down into here on a footprint chart, which is what everybody should have to find a little bit more detail, and we come into just after 9 Central rather. Oh, here it is. This was a beautiful, well, there's a piece that you won't be able to see, but what I had said in real time was, as we come down, this 2 even 2 quarter was good resistance because of everything I said, plus red edge zone, right in here, and then some shorts had puked, more shorts are shook out, and it made the path to go down a lot easier. You see this green get taken out without any hesitation? That's why old support that should have worked didn't, becomes new resistance across. And the market then finds that as a ceiling. So when people talk about these are highlights of what? These are highlights of commentary that are done during the trading room. Not just what could happen, but why it could happen. An analysis that cannot be wrong for long. So if you've been in other environments where the guy is bullish until it finally goes up, that's not good analysis. Then it's just a flip a coin analysis. You have to be able to navigate with what the market's telling you in as real time as possible and be able to have good objective decisions and opinions in a very subjective environment. Very difficult to do. Now, one thing I didn't bring up, but a guy in the room, because guys in the room in good rooms collaborate because they're looking at the right stuff, and that was, hey, keep an eye on gold. Gold did this just after 9 Central to help the S&Ps go lower. It's an asset allocation. You should know what asset allocation means. You should know what flight to quality means. So the yen, gold, bonds oftentimes could be flight to quality. Stocks go down, those assets could go up. That might sometimes get you into a trade. Other times it could keep you into a trade. Going to my point, how do you turn something very subjective and emotional into some objective thought and decision making? By staying comfortable looking at other things to keep you in the trade instead of just price, instead of just what you think. Because what we think is nonsense. Start to trade what you see, not what you think.